Ultimate Traders on Reddit. Nathan from Queens. Happy July 4th. Video 2, State of the Market. So since October, news has been wrong. Majority of people have been wrong. Why? The Fed never did a pivot. A pivot means instead of raising, they're cutting rates. The market said they were going to cut rates. It didn't happen. Not only that, it's July, and people were saying back in September last year that there was going to be a pivot. The stock market was going up on this pivot narrative that just never happened. Not only that, forget about the pivot. There's a good chance that the Fed hikes rate at least one more time and possibly two more times, because the last inflation reading was 4%, which is a lot better than 9%, but 4% is still double 2%. So the market rates went from 0.125 to now 5.1 in about 15 months, which is like unprecedented. And what this does is it drops earnings, it decreases the money that people have, and increases the cost of a dollar. So because of that, people have less money to spend. When they have less money to spend, that means slowly GDP will go down. When GDP goes down and earnings come down, people get laid off. Unemployment rises. So unemployment is at 3.7%. So slowly we're going to see what's going on with the Fed trickle in the market, trickle down in the economy. And the Fed is doing great, because honestly, I thought we were already going to have another 2 consecutive negative GDP quarters, which is a recession. So I don't know, I guess it's a soft landing. But the main point for everyone here is the S&P 500, as we know it, 500 stocks, has been out since 1957. It's up about close to 8% year over year since 1957. These companies that are in S&P 500 is considered the U.S. economy because it's 500 different companies. So on those years that it goes up 8%, average sales of a company increase 10 to 20%. And in those years when things are doing well, you're getting 8%, earnings are going up 5 to 10%. Well, guess what? Right now, the second quarter just ended, June 30th. Right now, we're going to have, in 2 weeks from now, we're going to have earnings reports. So in the first quarter of 2023, where were earnings and sales? So earnings on the S&P 500, and you can check the facts, were down 2.2%. Sales of the companies were up 4% on the 500 companies for the first quarter of 2023. So here we are, and the S&P 500 since 1957, it didn't just come out yesterday, normally trades at 17, 18 times earnings, okay? If it normally trades 17, 18 times earnings, right? And normally 17, 18 times earning, and it grows sales 10 to 20%, earnings 5 to 10%. Obviously, if earnings are down 2% and sales are up 4%, it shouldn't trade at 17, 18 times earnings, right? Come on, use our brains, right? It shouldn't, right? So right now, it's trading near 21 times earnings. Why? Because all the analysts are wrong. They were wrong last year. So January 1st of 2022, if you look back, I had earnings at S&P 500 at 215. We came in at 218. They had earnings at 250, the analyst consensus. Right now for 2023, the analyst consensus is 225. We came in earnings 218 to 219. I'm expecting, Nathan from Queens, for 2023, and I've written this many months ago, not just now, I'm expecting earnings to come in at 208. So what does that mean? I expect for the full year, earnings are down 3% and sales to be flat to 5%. Up, flat to 5%. So if you're going by me, and I'm much closer, and I have earnings at 208, right? And there's no way we can give the S&P right now 20 times earnings. Come on, that doesn't make any sense, right? So if you want to be nice, and we have a lot of retail now, and everyone wants to bid things up, you give this 17 times earnings. So 17 times 208, you get 3,400. Let's say 3,500. Where are we at right now? 4,550. So for me, why would I want to overpay for something now when I don't know what's going to happen in 2024? So a lot of analysts are expecting 2024 to be growing again. Maybe in 2024, we grow sales 10 to 20. Maybe in 2024, we grow earnings at 5 to 10%. But it's too early to say that's going to happen. And because I still see earnings declining and sales near flat, why would I pay now for something that may or may not happen? Now, I do believe it will happen, but it may or may not happen. But what's happening right now is sales are going to be flat, earnings are going to be down. I mean, this is so at July 4, 2023, the other day Tesla made deliveries. Come on, wake up, people. Tesla delivered 1.31 million vehicles in 2022. It's a small company. It's growing sales, right? So if they deliver 1.31, obviously every single quarter has to be a record in order for it to deliver more. Even before they drop prices in January, before Tesla missed the fourth quarter, by the way, all Tesla does is miss deliveries. They miss earnings. You will see earnings come out on July 19th. Earnings will be down, and you're going to see sales maybe up 20%. So slowly Tesla is growing. It was growing 80, 90% during the pandemic, then 60, then 50, then 40, then recently high 30s is going to grow sales at 20%. So what is that? If it's growing sales at 20% and they're making less money, that means that's a bad thing. That means you're working hard and making less money. Come on, wake up. And it went from 100, close to $100 in the beginning of the year to 280. Tesla has not created anything. All that is a hype momentum train. You know, so same thing with NVIDIA. NVIDIA sales are supposed to be up 60%. Earnings are 60% year over year, which is very good news. Earnings, we don't even know. It might be up 20%. But for that, it has a 200 times PE ratio. Let's go back to Tesla. So it's not just Tesla. So Tesla must have a record quarter every single quarter. And before they missed for 2022 final, analysts had them delivering 2 million vehicles in 2023. Now analysts have them delivering about 1.85. They might miss that, and they drop prices. So they're selling more and making less. Come on. So that's the problem even with Apple. Apple is earning around the same because they're buying back shares. There are a lot of buyback shares. That's what you want a company to do to raise shareholder value. But you're going to see sales either flat, might even be a decline. They're earning less money. The money that the EPS is higher because they're buying back shares. So what does that mean? The biggest company, it made a record high. It's trading at 30 times earnings. But if any company deserves, a higher multiple, I guess it's Apple. But the company is not growing earnings, not growing sales, yet it's trading a higher multiple than ever, and it's a $3 trillion company. So what is the reason to buy? So like I said, I don't expect earnings off a cliff bad. I expect earnings down about 3 or 4% for the full year, and I expect sales to be flat to up 5% for the full year. So for that, why would I pay 21 times earnings for S&P 500? This is not 2020. This is not 2021 when analysts had estimates so low. We were off a pandemic. The Fed was pumping trillions of dollars. People had money to stay home. Every company, right off the bat, the expectations were so low, and then we opened up the economy. Every single company was rocking sales, rocking earnings. We had some sales growing 40, 50%, earnings growing 30, 40, 50% also. So naturally, the NASDAQ went from 10,000 to 6,000 to record highs of 16,000. Why? We had record sales, record earnings, commission-free trading, interest rates were so low, everything was cheap. So obviously you can have the S&P 500 at 4,800. And we had analysts expecting close to $250 earnings. So if they were expecting 250 and we were growing in record sales, record earnings, that's why we were trading at close to 25x. That was pretty dumb. We came in at 218. So the analysts were way off. They're going to be way off again. They were wrong about the pivot, wrong about the pause. We're still going to hike rates, but hey, the stock market is a live auction, so the market keeps going higher. But the news is bad. The news is not good. The news has only got worse since October. Interest rates keep going up. Sales are slowing. Earnings are coming down. People are getting unemployed. Come on, those are facts. The stock market is an auction. Sentiment. For whatever reason, people have a good sentiment, so I'm just going to wait. Good luck.